Good morning, everyone. It is Monday, October 13th. Ben Buckner and Dan Basse with Ag Resource Company in Chicago joining you. It's been, Dan, I think, an incredibly chaotic 2 or 3 days, to the point where you're giving speeches and presentations, and within 30 minutes, all of your ideas are outdated. So I think that's what markets are struggling with. We did see some volatility on Friday. Markets recovering today. And we've really thrown a lot at these markets the last month or so, thinking about Argentina ending its export taxes for 3 days. Now we've got a lot of uncertainty over future trade policy, both with respect to tech and grain. Markets collapsed on Friday, but we're coming back today. And overall, it seems like we're still in these kind of defined trading ranges. But I'll go ahead and pass it to you, break down everything that we have seen in the last couple of days. And it's been a lot.
Yeah. So Ben, the USDA and the U.S. government may be closed, but President Trump is working. And I think that's the key message to the grain markets. And to grains, the big feature is going to be the U.S.-China trade agreement. And so everybody is very hopeful at the end of this month that Trump and Xi would get some kind of deal that would allow U.S. soybeans to be exported again. The American Soybean Association, again, tweeting and putting out that they're very disappointed that Trump appears to have canceled it. I'm not sure he's canceled it. I think at this point he's posturing. But that being said, we're uncertain how this all lies. And then the Trump tweet on Truth Social on the right came out on Sunday around noon, and it said, "Don't worry about China. It'll all be fine." And respected President Xi he had a bad moment, but again, he doesn't want the country to fall into depression, so we'll go from there. My own thinking about all of this is that, the currency markets and the cryptocurrency market in particular reacted violently on Friday. Of course, the Trump family is a very big holder of cryptocurrency. So if you think about him heading to Israel and, of course, the Middle East, of course, for the release of hostages and the peace deal there with Gaza, he kind of wants to go over there with a little bit of peace himself. So let's put out a little tweet on Sunday that says, the U.S. and China is fine. And that's kind of where the markets find themselves this morning in trying to understand whether we're in a good spot or not. Now, the Chinese overnight said nothing. Really, they said that they're not backing down. We've got vessel taxes that go into play on Tuesday, both U.S. and China. The U.S. vessel tax has been known since April. The Chinese vessel tax since Friday. It has upended global shipping. And as you start looking at world freight rates, they are rising rather dramatically. Ship owners don't know what to do. Of course, China's news on Friday was that if a vessel is 25% owned by a U.S. entity, or part of that board is 25% American, it will have a $52 ton vessel tax coming into China. So between the two of them, the U.S. tax and the Chinese tax, the vessel market is upended. Everybody's trying to figure it out. Of course, the biggest impact will be on tankers and probably LNG and energy related, but even bulk carriers. People are telling me that it could be as much as 10 or 12% of the fleet. So again, uncertainty related to that, but the Chinese not showing any indication that they really want to back down. In fact, in their media, China is stating very strongly, we did not want a trade war, but we're not afraid of one. So that's kind of where the Chinese are this morning. And I'm expecting that on Tuesday, those freight taxes, both at port and on vessels, will come into play from both the United States and China. No change on rare earth minerals. So that is what we know. We talked about that on Thursday. That's not changed here this morning. So although Trump can say that everything is fine and Xi will do the right thing, we'll watch very carefully as we go forward whether or not Trump and Xi can find themselves talking to each other in late October in APEC. Without that, I'm really concerned that, of course, the Chinese are going to abandon U.S. soybeans at least through the end of the year. China overnight indicated, or data indicated, that Chinese census data indicated that they imported nearly 13 million metric tons of soybeans in September. So the Chinese are amply looking at their soybean import base. If you looked at U.S. Export or U.S. imports from China, they were down 27%. So increasingly, the U.S. market is less important for China. Used to be about 295 billion. We would now calculate it somewhere around 220 billion. So again, China's importance to the United States is diminished. That gives China a lever of some support in terms of the trade war. As you think about soybeans, and if we don't get a deal, it seems like Trump, every time we get beans at $10 or below, the Trump administration tweets something else to support the market. However, as you look at this graphic, if the Chinese do not buy U.S. soybeans, let's say by the end of October, beginning of November, I'm pretty sure we're going to test that bottom end, the extreme there. Let's call it 940 to 950 relative to spot futures. So that kind of highlights where the market is in terms of soybeans. In terms of the corn market, farmers are actively harvesting of corn. We're finishing up of beans in many areas across the Midwest this week. We'll be turning over to corn. You see a gap level at 405, but the real support doesn't show down until around 370 or 380 a bushel. Our average farm gate price at Ag Resource for the crop year is 375. So going down and testing this level during the month of during the harvest or latter parts of harvest would not be unusual. We'll see how this all plays out. Farmers will need cash in November. They will need to sell some grain just to pay rent that's due and also chemical and seed bills. So if the administration doesn't open up in the next 10 days, I think the farmer has little choice whether to move out beans or corn will be his decision. But I would imagine they'll think more corn than beans as he looks forward. The about the wheat market is again sinking. World wheat prices in Russia are back down to 228 bid here this morning. We see that Argentina has been very aggressive on the sell side as the Rosario Exchange increased their crop to 23 million metric tons. You can see here that exporter supplies of wheat are record large. That's something that will keep the wheat market on its back. As you think about wheat, I'm almost starting to think about maybe that as we get into the winter, if we don't see a big change in world demand, that wheat prices could fall to 450 or 470 a bushel. That's the downside target that would be shown on this chart. So again, rallies will be fleeting. The world's oversupplied in wheat, oversupplied in corn, and then we have soybeans, and that'll all depend on U.S. and China in terms of where we go from there. Lastly, if we finish up, and South American weather looks generally favorable. We've got a fair amount of rain for much of Brazil this week. Temperatures will be cooler than normal. Next week, Argentina starts to rain again. A little less rain across northern Brazil. The GFS is drier, still not coming along with as much rain as the EU, but the EU market has had the right track record going back to the middle of September and would be my model of choice. So no real problems today as spring seeding kicks off. Mato Grosso is now 21% planted on its soybean crop, the second largest on record. So things are moving quickly down in South America, and Argentinian farmers really getting at that first crop of corn. So look for some very strong ratings for the corn crop as we go forward.
Yeah, I think very, very good rundown. And so we think about, U.S. yield uncertainty will persist probably until January. But when we think about risk management, as we always do, I think it's two things. It's U.S.-China trade policy, which is unpredictable and chaotic, and then probably just South American weather. So focus on those two things when we think about what to do in the markets for forward hedges, especially. As usual, all the best. We will be back with more information later in the week. And so good luck in the markets.